Hi everyone, it's Grace. Welcome back to my channel. So the market is just getting crazier for the past few weeks. And with risks both in the domestic and international market, the US housing market is facing so many uncertainties in the coming weeks. So the news about China Evergrande basically just exploded all over the internet. What is happening? And most importantly, how contagious it is to the US market. In this video, I will answer that question clearly. In a poll that I did last week, 47% of you think that it will cause a market crash in the US, 22% said no, and 31% said it's hard to tell. So today, I will explain in simple language and simple logic, and also update on the news that just came this morning about the reaction made by China Evergrande and also the Chinese government. Before we begin, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. So how much trouble is Evergrande in? Let's look at its balance sheet because it's the most reliable and direct way to tell the financial situation of the company. Its reported balance sheet in Hong Kong Stock Exchange as of June 2021 shows total asset of 367 billion, total equity to be 63 billion, and the total liability is 304 billion. So its liability to asset ratio is 83%. One thing I want you to pay attention to is the accounts payable, totaling $147 billion. That basically means that Evergrande has yet to pay its contractors, suppliers, or anybody that it does business with. Out of the liquid assets, only 22 billion are completed properties, and there are still 197 billion properties that are still in progress. What happened to the people who have already paid for the properties but have not even seen it constructed yet? I don't know how you guys feel, but I feel like this is something that should not be happening to a large corporate. No wonder people surround the corporate office in Shenzhen demanding Evergrande to return their investment money. The next question is who hold the bond issued by Evergrande? According to Morningstar, some financial institutions, asset management, and investment companies hold Asian high-yield bonds by Evergrande, including Fidelity, HSBC, BlackRock, PIMCO, and UBS. During the period between January and August 2021, BlackRock holds 31 million shares of Evergrande bonds. HSBC has 40% more of its bonds. So Evergrande's problem didn't just come out of the blue at the beginning of September. It already started back in January, and these companies are selling off the bonds because the default risks are increasing. So why would Evergrande default? Let's take a look at its upcoming bond maturity date. Its bond was rated by Fitch Ratings as AAA, which is basically the highest rating of bond. It's safe and it gives good returns. Defaulting on the interest payment will basically damage the reputation of Evergrande and leads to bond sell-offs. Since Evergrande is an oligopoly, its impact on the economy is significant. Its 5-year bond with $83 million is coming due on September the 29th, but there's a very high chance of defaulting on it if it doesn't sell its assets. It's also reflected on the bond yield skyrocketing to above 500% according to CNBC. Usually, AAA bonds have low yields, but on September the 7th, Fitch Ratings downgraded it to CCC+. So basically, Evergrande's bonds now become junk bonds. So the next question is, why did Evergrande fail? It imploded because it's against China's policy to refocus its economic development on providing common prosperity to average people by deleveraging and preventing property prices from overinflating. I mean, I understand the double nature of real estate, that it is both important for people to have home ownership and also a financial tool to build equity. But over-leveraging will just create a lot of debt problems, whether you're in China, the US, or anywhere else in the world. Besides, China is very determined in implementing the policies to reach the goal of common prosperity. In one of my videos, I briefly discussed the topic. You can click here to check out that video. In the mid-year of 2020, Chinese government came up with policies called the 3 Red Lines to further restrict financing of real estate companies. Number 1, liabilities to assets ratio should be no more than 70%, and Evergrande is at 82%. Number 2, net debt to equity ratio should be no more than 100%, and Evergrande is at 183%. Number 3, cash to short-term borrowing should be no less than 1, and Evergrande is at 0.4. Since it broke the 3 red lines policy, its borrowing source is restricted. So that's why it's running the default risk. So how big of an impact does it have on the Chinese economy? First of all, banks and financial institutions that lend money to Evergrande will probably not even see its loan principals paid off, never mind the interests. Second, contractors and suppliers who build and provide services for Evergrande will probably not get paid. Third, people who have already paid for the properties yet to be developed by Evergrande will say, "Where's my property?" And lastly, individual investors who bought Evergrande's financial products will probably not see anything, because they will all suffer the impact with its liquidity issue and its upcoming default. The stock performance almost immediately reacted to Evergrande's default risk. The main company, China Evergrande Group, fell all the way from January 2021 till now with a 66% fall. Its subsidiary, Evergrande Property Services, fell more than 50%. The US stock market also felt its impact. Dow Jones fell by almost 900 points from a week ago, S&P 500 fell more than 100 points, and Bitcoin fell more than 7,000 points. So it's definitely contagious to the US market. So here's the key question. Is China bailing out Evergrande? This morning, Evergrande just made an announcement to pay the interest for $83.5 million and another $47.5 million due next Wednesday. At the same time, the Chinese government just released $18 billion from reverse repo to provide some buffer for the banking sector and the real economy, because they are the first to suffer. But this is more of a support for the real economy than a bailout, because Evergrande still needs to sell off the assets to pay for those interests. Since Evergrande derails from China's goal of deleveraging and taking down monopolies and oligopolies, it is in the process of asset restructuring. And this is exactly what we're seeing now. Evergrande is settling accounts to pay off its creditors, investors, and shareholders. So is Evergrande in any way similar to the Lehman Brothers back in 2008? Remember that Lehman Brothers was not bailed out by the US government but filed for bankruptcy. So I would say it is very similar. Now comes the most important question. After all this is explained, is Evergrande still contagious to the US market? It's not just about who holds the bond and shares of Evergrande that are exposed to the crisis, but whether there are still many US corporates that face the same liquidity issue as Evergrande. In a way, it has nothing to do with whether it's a capitalist or socialist system. Forget about it. The liquidity issue lies in the nature of the corporate itself, and we have a reason to be worried. I mentioned that BlackRock is one of the bondholders of Evergrande, but this type of contagion has nothing to do with that. It lies in the financial status of the corporate. In the balance sheet of BlackRock, the total assets is $176 billion, and total liabilities is $138 billion. The liability to asset ratio is 78%, which is very close to China Evergrande's 82%. It's a simple issue that a corporate is not able to pay off its debt with however little equity it's holding. Similar to Evergrande, BlackRock will probably not even have enough cash to pay off the interest that's coming due. That's the type of exposure that's really contagious and dangerous. I'm not targeting at a specific company and saying that this is good and that is bad. The financial statement speaks for itself. As an investor, bondholder, shareholder, or whatever part you're playing, it is your responsibility to look at the financial status of the corporate that you're investing in. So the real contagion is overleveraging. It allows corporates to quickly expand, but it also carries too much debt and drag down countless financial institutions and companies that depend on it. So the default risk of Evergrande could happen to BlackRock or any other company where their liabilities are way over equity and they don't even have enough cash to pay it off. And guess what? The upcoming debate about the debt ceiling is adding more complications. If the US government defaults on the Treasury bond, it will have a far more catastrophic impact on the US economy. So I hope today's video provides some clarity to the status quo and a real issue behind all this craziness. As always, thank you very much for watching, and I'll see you on the next one.